morning, everybody. Thanks for joining us on a Saturday morning. I'll start with the introduction of Satish. So Satish has got over 17 years of industry experience in fund management industry. Satish last was research analyst tracking oil and gas, metal and mining and chemical sectors. His previous instance has been as research analyst with HDFC Securities for 5 years, PAI NC Research for 4 years, tracking oil and energy related sectors. In 2017, Satish received the #1 stock picker for energy sector by Starmine, and he has also worked as an assistant engineer with IFCO. Pedigree wise, Satish is BTech from IIT PHU, and he has he has an MBA from TAPI Management Institute. Welcome, Satish.
Thanks, Ankit. Thanks for having me on the show.
Great. So, Satish, we'll do this in a Q&A format to make it more, engaging for the audience.
Perfect.
Audience are there on two platforms. One is on Zoom call, and also we are streaming it live on YouTube, on our YouTube channel.
Great.
I hope that's fine with you.
Yeah, absolutely.
Great. So, Satish, I'll start with very basic question. What are mid caps, and what is the range of size of companies classified as mid caps?
So now mid caps, large cap, small cap, these classifications are very clear. Every 6 months we get a list, and basically this is based on market cap. So you have all the companies based on market cap, and then first 100 companies are large cap, and from 101 to 250. So these 150 companies are classified as mid cap, and below 250s they are small cap. And market cap wise, so again this varies. As I said, this list gets changed every 6 months. But if you see last time, it was close to say market cap ranging from 17,000 crore to up to 50,000 crores.
Great. And Satish, if you can take us through a little bit about the sectoral distribution in mid cap index. So typically in large cap, we say that banking and finance has got higher allocation. So is there any such segregation in mid cap also?
No, actually that's a beauty of mid cap. Even if you look at the mid cap index itself, you will see say there will be 18 to 20 sectors contributing over there, and there is absolutely no skewness like what we see in Nifty or large cap. In fact, I don't think any sector, even if you take all BFSI together, this financial, insurance, AMC, everything, then also the weight will be less than 20%. So that way it is very well diversified. And if you see this space, so you have representation from almost all the sectors you can think of: banks, financial services, auto ancillaries, capital goods, power, healthcare, hospital. So whatever you can think of, because it is so diversified, ranging across 18 to 20 sectors. So this has almost everything. In fact, in chemicals, you will find representation from both chemicals as well as agri input. Similarly, auto anchs, both are present. Even it has representation from consumer durable, consumer staples, telecom, ITES. So as I said, it is very well diversified, and any sectors you can think of, probably you will find the name here.
Great. So good to know that mid cap is more, diversified sector wise as compared to large cap. So Satish, as a mid cap manager, what are your views on different sectors in mid cap category?
See, Ankit, so when we build a portfolio, as you know, these portfolios, what we build, they are of long-term nature. So always the sectoral call, overweight, underweight, is based on the trends what we see. So there are 2-3 factors which decides whether we are going to be overweight or underweight on the sector. For example, first we always try to analyze the macro situation. How is the macro is shaping up? Second is the cyclical recovery in the earnings, and third is the valuation. So I'll just tell you my process, so that itself will tell which sectors I am bullish on currently. So for example, taking the clues from the macros. So there are 2-3 very clear trend currently present in Indian economy. First, we are hearing a lot about growth. Even if you look at government different communication, they are talking about 5 trillion economy, 10 trillion economy, going from developing to developed. So there is definitely a lot of focus on increasing the growth, GDP growth for the country. And now what happens when you are talking about the GDP growth of the country? So as a fund manager, you need to analyze that which all space where government can actually increase it significantly. For example, अभी आप GDP देखोगे तो GDP has three component: agriculture, services, and manufacturing. Agriculture has a limitation. We have a small farmland, we have dependency on monsoon. So actually manufacturing and services are the two pieces where we need to have high growth to sustain a 7-8% kind of GDP growth. And in fact, in the services industry, we did very well over the past, in fact, 2 decades. So now this time, if you look at all the government policies, they are very much focusing on the manufacturing piece. In fact, all the PLI schemes we are hearing, they have identified different sectors under champion sectors. So government is very clear that this time, again, if you have to go back to 7-8% GDP growth, this has to be driven by manufacturing. So manufacturing is one theme which is going to stay there for next 5 to 10 years. So even as a fund manager, what we try that any such sectors where we are going to see significant push from the government, those sectors we always try to go overweight, so that if there is a good rally in those sectors, we will benefit from there. Similarly, for example, the second trend is rising per capita income. So currently we are at close to $2,500 per capita. Eventually it will be 3,000, 3,500, 4,000. So again, that is also a trend which is going to stay there for next 5 to 10 years. So again, when we position our portfolio, we go for premiumization kind of stocks, say QSR or consumer durable, which is related to premiumization. So first, always we try to identify those themes. In fact, the midcap, the beauty of the midcap is at this point of time, many of the things what I just talked about, for example, China plus one, PLI, capex, manufacturing, you will find that midcap companies have a very good representation in all this. So just clubbing all this at this point of time, we are significantly overweight on anything which is related to capex, manufacturing. So you will see probably my weight will be double of the benchmark. We are so bullish on this space. And we feel that it has just started. There are more than 10, 12, 14 sectors, in fact, which government has identified as the champion sectors. And so far, PLI has come only into few. So you will keep this happening. So that is one space, this whole manufacturing industrial capex, we are quite bullish. Second, again, logistic, we are quite bullish because whenever you are talking about manufacturing as a theme, so the best part with manufacturing is you will need the transport of both raw material as well as finished good. So logistic will have a very large role to play. So again, there also we are significantly overweight. Third, what we are seeing is that both the capex is happening at all the three fronts. So even we are seeing that at the private level, public level, and even the real estate, what we are seeing. So clubbing these three, we are bullish on the cement or the building materials, which is related to all these sectors. So these are few. Then again, if you are talking about a GDP growth of 7-8%, so definitely you have to have a very good, lenders will do very good. So even banks, we are overweight. So basically, most of our overweight calls comes from the sector tailwinds, and most of the underweights are basically coming from the sector headwinds. So that way, we have positioned ourselves. And some of the sectors where we are underweight, so we are still underweight on IT. Still, we think that US situation is not completely out of woods. We are equal weight kind in pharma. But these are the broader cement we are overweight. So as I said, anything related to capex, infrastructure, banks, lending space, yeah, microfinance, I am very positive. So these are some space we are overweight.
And underweight?
Underweight, as I said, one is very clearly this IT we are underweight. We try to avoid sectors like oil and gas, where government interference used to be high. Those politically sensitive sectors. So I'm underweight. Third, even metals also I'm underweight. So what I try is that I try to play these commodities via the alternatives. So for example, you may find that I don't have metal stocks, direct metal stocks, but I have converters to play that theme. But in general, metal also I'll be underweight. So the commodity nature. So my idea is that in mid cap, basically the best part with the mid cap is the growth is going to be very strong. So the idea is you stay with the growth oriented companies, try to minimize the cyclicality, and just ride with the growth.
Satish, you mentioned about PLI scheme, and PLI has been phenomenal success in electronics, especially in mobile. Now they are government is rolling it out for import substitution in other sectors also, like steel, etc., etc. So for the benefit of our audience, if you could just take us through some anecdotal numbers which proves how good PLI has been for India. Like people keep on citing mobile numbers, etc. So can you cite us some numbers which show that how successful PLI has been?
So first, we need to understand that still I believe the real benefit of PLI has yet to come. So as you
I'm sorry, I am interjecting. If before that you could just take us through what is PLI for the benefit of our audience.
Sure. So basically, it is a production linked incentive. So what government has said for, say, for example, in a very simple term, I'll try to explain it. Say there is a company which manufactures 100 volumes of something. The revenue is say 100 crores. Okay. So what government says that you increase your capacity from year, you increase your revenues, and for the incremental revenue, so government has set up a benchmark. Say, for example, in last 3 years, you have produced 100 crores kind of revenue. So your current capacity can generate say 120, 130. So what government says, you put up a capex and you take your revenues up from say 100 to 200 and 300. And for incremental revenue, we will provide you the incentives. This is in the simple term. So how they provide the incentives? So you can find in some places they will reduce the taxes. There will be incentives on GST. There will be incentives on different sales tax. So we need to understand basically what is the idea. The idea is, as you rightly said, import substitution is one thing. But if you look at all the different sectors which has been identified under PLI, you will clearly notice there are two themes which government has in their mind. One is definitely the import substitution. So many sectors will fall under that. For example, one electronics, which you just highlighted. Then second, even in say, for example, the pharma and chemical, most of our raw material intermediates comes from China and from other countries. So one is definitely there are many sectors which will be part of this import substitution. But at the same time, another thing what is happening, as we know that the rising cost in Europe. So China plus one is one thing which we discuss a lot. But my belief is probably in coming time you will hear Europe plus one also in the same intensity. So basically now what is happening, even the manufacturing setup from Europe and from other developed nation is also shifting. So government is also looking at the sectors where we can be an export hub to these developed country. For example, if you talk about the auto anks, these all auto ancillaries related to companies, or say bearing related to companies. So you will notice that those stories are not much related to import substitution, but basically it is that we are seeing a very large opportunity in US, Europe, Japan. So all these sectors are basically classified under these two. And third, also we must notice that there are some new sectors. For example, as I said, that so in the beginning I mentioned two themes: uh, the rising growth and the rising per capita. In fact, the third theme, what I believe is very important, is the uh, increasing uses of clean energy, green energy. So these are slightly newer sectors. So you will find that the whole PLI scheme, basically the government is giving incentives to any such sectors which can participate in any of these three. या तो आप export बढ़ाने में help करो, या तो आप import reduce करो, or you are getting into say hydrogen, you are getting into solar, you are getting into anything which will make you a better green clean countries. So that way, so here how government has done. So still, as I said, it is still at a very nascent stage. For example, you talked about electronics. So we need to understand what happens that. So I'll give you an example. For example, when this Maruti Suzuki came in India, I believe 80s sometime. So what happens when these companies, the large companies, OEMs comes in India. So that time we barely had any auto anchors company. But when you start any value chain, then eventually you will see the whole infrastructure around that will come. And currently we are self-sufficient in auto ancillaries. So similarly, when you are talking about electronics, if you look at the electronics value chain, it is very large value chain. Okay, starting from the manufacturing of semiconductors, manufacturing of everything, and it goes up to assembling. So to tell you very frankly, I really don't want to take pride in just boasting on the assembling numbers, because currently we are just doing the assembling part in this whole value chain. And if I am not wrong, the value addition will be less than 10% in the whole manufacturing of that electronic equipment, what we are doing currently. But my idea is, so as I gave you the example of Maruti Suzuki, and then what happened after that in next 10 to 20 years. So what I believe, the similar things we are going to see even in the electronics and all others also. So as of now, we are just doing the assembling part of that. Eventually, you will see that we will start manufacturing, say 5 or 10% of component here. And there will be a time in 10 to 20 years, again, you will see we will have self 100% sufficiency of all this. So I believe, as I said in the beginning also, these themes are there to stay for next 5 to 10 years. That is the key reason. And I believe it is going to happen. For example, if you look at few of the companies, they started with the assembling of mobile phones. Now they are getting into the assembly of laptops. Yeah, but still we are not yet there into the manufacturing of any of these components. So that way, I feel one should take it this way, that it is a story of 10-15 years, Ankit. और अभी हम लोग कुछ भी नहीं कर रहे हैं, मतलब वो लास्ट का सिर्फ पैकेजिंग कर रहे हैं, which is the 5% of the whole value addition.
But as they say, every story starts with every long journey starts with a single step. So at least we are moving directions.
Yeah. Very true. In fact, I'll give you other examples. For example, if you just take the case of, say, pharma industry or agrochemical industry. Okay. So as you rightly said, that there also currently we are sourcing a lot of molecules from China or say other countries. And now there also what government is doing for some of the chemicals where size is small, there they are coming up with different policies. And idea again there is that first you go, say for example in chemicals, you will find there will be 50 to 100 different chemicals which we import in large quantities. So government is going one by one. So as you rightly said that the direction is correct, and all this policy clearly says that there is a long growth we will keep getting from the PLI and manufacturing.
Yeah, that reminds me, even for mobile manufacturing, what they are doing is first they are going for low technology content spare parts, and then gradually they are moving to high technology component parts.
नहीं ट्रू, इनफैक्ट आई टेल यू 2 साल पहले आप चले जाओ तो सिर्फ फीचर फोन हम लोग असेंबली करते थे. ठीक है. देन नाउ वी आर इनटू द असेंबलिंग ऑफ स्मार्टफोन्स, एंड इवेंचुअली यू विल सी दैट वी विल गेट इनटू द कंपोनेंट मैन्युफैक्चरिंग. सेमीकंडक्टर्स का हम लोग बात सुन रहे हैं. ठीक है. तो इट इज ऑलवेज व्हाट आई बिलीव. So in a very normal sense, what I believe that once you identify the problem, half of your problem is solved.
Very true.
So in this case, government has clearly identified that which all areas where we lack, and government is addressing that one by one. And definitely policy is needed, because even if you look at so in fact I was going through many policies in China when they were increasing. So lots of subsidy were given to these industries, to all the industries, be the cyclical industry, non-cyclical industries. So definitely these incentives are must. And one other thing, what not good, but what happened during this COVID time, for the 2-year period, okay, all the management, all the companies, they went very slow on capex mode. And as a result, what happened? Everyone's balance sheet is so strong. ठीक है. जैसे अभी मैं आपको एक बड़ा सिंपल सा एग्जांपल दूं. इफ से देयर इज अ बिजनेसमैन who want to build a new, say, factory, a new industry, anything, there are just 2-3 important things they require. One is government support, policy support. Second is there should be a market to sell. And third is there is strong balance sheet. So in India, what has happened because of this COVID and 2 years, 3 years of saving, uh, optimizing their business, going for efficiency increment and all that. So balance sheet of all the companies are very, very strong at this point of time. And because of the policy, import substitution or export hub, now you have got a market also. And then government is there to address all your concerns. And in fact, I'll again highlight you that one of the most important thing which government did towards all this is reducing the corporate tax rate from 33% to 25% in year 2018-19, I think. So that was one of the most tangible things. So that clearly says that policy is very, very supportive for these guys. And you will keep seeing. So currently, if you talk to any management, either they are already participating in the capex, or if they are not participating, they are still negotiating with the government for the better terms. But eventually, everyone is there. Everyone has made up their mind that you have to participate in this race.
Great. Satish, another concern, that has been going on in people's mind right now is about valuations. So I will request you to first, tell our audience how do you define valuation, how do you calculate it, and then after that you help us understand. Do you think where valuations are placed as of now? They are cheap, they are expensive, or they are neutral?
Right.
Or mid cap only?
Yeah. So see, for valuations, there are different parameters. Okay, when we analyze the company, so we go by different. So different sectors have different dynamics. So price to book, EV EBITDA, price earning. There are different parameters. Okay, but for the simplicity of the audience, I'll just tell that at your end, probably the one very important valuation metrics which you can look at is P by E, which is price by earning. So for example, say if there is a company which is trading at say 100 rupees and you are seeing the earning of that company, the EPS, which it is generating is say 5 rupees. So stock price is at 100 rupees, earning per share, क्योंकि आप जब स्टॉक प्राइस बोलते हो तो आप एक स्टॉक का प्राइस बोल रहे हो, इसलिए आपको अर्निंग पर शेयर लेना होगा, जिसको हम लोग ईपीएस बोलते हैं. तो आप जब स्टॉक प्राइस को अर्निंग पर शेयर से डिवाइड करेंगे, जैसे इस केस में 100 रुपीज स्टॉक प्राइस है और 5 रुपए उसकी अर्निंग है, तो यू गेट अ नंबर 20. सो दैट इज P by E ratio. So what happens when you are looking at a portfolio, when you are looking at an index? So there are different companies. For example, if you look at the midcap index has 150 companies. So all these 150 companies will have their earning. At the same time, based on their free float, based on their market cap, they will have different weights in the index. तो जैसे अगर 100% का आपका पोर्टफोलियो, आपका इंडेक्स है, दिस मिड कैप इंडेक्स, and there are 150 companies, so you will see that some will have of weight 1%, 2%, some will have also 0.1 and 0.2%. तो इसमें फिर क्या होता है कि आप एक वेटेड एवरेज अर्निंग निकालते हो कि किसी कंपनी की अर्निंग 50 रुपए है, किसी की 100 है, किसी की 200 है, एंड बेस्ड ऑन द वेट्स दे हैव इन द पोर्टफोलियो, आप उसके बेस पे एक वेटेड एवरेज अर्निंग निकालते हो और फिर आप देखते हो कि आपका वेटेड एवरेज पोर्टफोलियो का मार्केट कैप क्या है और उससे आप P by E निकालते हो. अभी यहाँ पे क्या है कि दिस P by E और एनी वैल्यूएशन मैट्रिक्स इज अ रिलेटिव नंबर. ठीक है, जैसे कि अभी फॉर एग्जांपल मैं आपको कोई भी एक नंबर डेटा पॉइंट दे दूं कि ताइवान में समथिंग इज ट्रेडिंग एट 150 टाइम्स, इट हैज नो मीनिंग. सो एनी रिलेटिव नंबर हैज नो मीनिंग अनलेस यू गिव अ कॉन्टेक्स्ट टू दैट. तो जैसे अभी हम लोग अगर बात करें कि मिड कैप का वैल्यूएशन क्या है, तो इसमें देयर आर टू थिंग्स वी नीड टू ब्रिंग इनटू द कॉन्टेक्स्ट, तभी उस नंबर का मतलब है. तो फर्स्ट इज say as I said कि you have large cap, you have mid cap, you have index, you have small cap. तो पहले आपको इस तरह से डिफाइन करना होगा कि जैसे लार्ज कैप जब हम लोग बोलते हैं तो दे आर ब्लू चिप कंपनी, दे आर लार्ज स्केल साइज. तो वो लोग किस पे ट्रेड कर रहे हैं एंड वहां से आप रिलेटिव बताओ कि मिड कैप कहाँ ट्रेड कर रहा है, देन इट गिव्स अ क्लियर पिक्चर. एट द सेम टाइम अगर मैं बोलूं कि ये प्रीमियम या डिस्काउंट पे चल रहा है, तो अगेन दैट हैज नो मीनिंग अनलेस यू गिव अ कॉन्टेक्स्ट कि पिछले 5 साल 10 साल में ये हमेशा प्रीमियम पे चलता है या हमेशा डिस्काउंट पे चलता है, और अगर डिस्काउंट या प्रीमियम पे चलता है तो व्हाट आर द रीजंस। तो इस पूरे कॉन्टेक्स्ट को मैं बताता हूँ। तो जैसे अगर अभी आप एक नंबर्स पे जाइए, जैसे फॉर एग्जांपल से फॉर निफ्टी विच इज लार्ज कैप रिप्रेजेंटेशन, तो वो आप देखोगे दे आर ट्रेडिंग एट लाइक से 19 टाइम्स 1 ईयर फॉरवर्ड, 19 टाइम के आसपास चल रहे हैं। If you talk about mid cap, they are trading like 10% premium to that. So they will be trading at 21, 22, depending on different assumptions, what everyone has made. But premium is not more than 10% at this point of time, 10 to 15%. Now the question comes, if I say mid cap has a premium of 10% over large cap, then the question is कि why there should be a premium or discount. So what I believe, अगर जैसे अभी आप कोई चीज खरीदने जाते हो, आपको दो चीजें मिल रही हैं, एक चीज मिल रही है 10 रुपए, दूसरी चीज मिल रही है 11 रुपए, 10% प्रीमियम पे, तो यू विल ऑलवेज सी द बेनिफिट फ्रॉम बोथ ऑफ देम। तो अभी जैसे मैं बताऊं, सबसे एक इजी बेनिफिट होता है देखने का अर्निंग ग्रोथ, क्योंकि अल्टीमेटली क्या है हमारे मार्केट में, अर्निंग ग्रोथ इज द की। अगर आपके पोर्टफोलियो में अर्निंग ग्रोथ आता रहेगा तो उतना आपको रिटर्न मिलता रहेगा। इफ यू लुक एट द लार्ज कैप निफ्टी, so you will see that वहां पे जो अर्निंग ग्रोथ का एक्सपेक्टेशन everyone has, that is ranging from 12 to 14% broadly. Okay, everyone has different estimates. So these are again very broad estimates I am taking from different brokers. Whereas if you talk about mid caps, so as I said, these PLI scheme, the focus towards manufacturing, this whole public private capex is helping mid cap space and all that. So you will notice that mid cap space will have a earning growth which will be like 18 to 20%, as against the 12 to 14% what we talk for Nifty. तो यहाँ पे आपको अर्निंग ग्रोथ भी 20% ज्यादा मिल रही है, and on that context you have a valuation which is 10% higher. So I think we should always see valuation in the context of what kind of earning growth we are getting from the category. So mid cap is trading at say 21, 22 times, which is 10, 12, 15% premium from large cap. But at the same time, your earning growth will also be 15 to 20 or maybe 30% higher than the large cap. So that way, still I feel it is quite justified. Second interesting point is that what happens, see prior to this classification based on market cap, जैसे अभी मैंने बताया कि mid cap is from 101 to 250. Say if you go back 5 years back, so that time the categorization was not so well, and that time what used to happen, there was a perception that these mid cap companies have higher risk associated with them. But now the situation is, as I told you, the market cap. So their market cap starts from $2 billion, 17,000 crore से start हो रहा है, and they are going up to 50,000 crores. So the point is, the company of the size of 30, 40, 50,000 crores, they are as stable as a large cap, the nature wise. They are not 3,000, 5,000 crores market cap company. So what I believe that we should always look, when you are comparing the two segments, you should always look at the balance sheet strength, the growth potential. तो अभी जैसे मैंने बताया कि मिड कैप कंपनीज का लेवरेज भी आप देखोगे तो दे आर probably the balance sheet in 22 was the strongest balance sheet over the last decade. At the same time, earning growth, as I said, will be 20-30% higher as compared to Nifty. तो उस कॉन्टेक्स्ट में मुझे लगता है 10-15% वैल्यूएशन, हायर वैल्यूएशन इज क्वाइट जस्टिफाइड. And also I'll try to give a relative context to your audience, that for example, last time this mid cap index peaked in 2018-19. Okay, so you should always see that what was the premium of mid cap over large cap at that point of time. So I believe, if I am not wrong, that time it crossed 60, 70, 80% over large cap. So that way, I believe that still the valuations are not so high, and earning growth will support it.
Great. And Satish, so from India, let's go a little bit global. What do you think can be interest rate scenarios in global context, and what can be implications for Indian market? So this is one risk that I can think of. But do you think there is any other global risk that can affect Indian markets in coming days?
Yeah. So I believe there are two things which we need to analyze when we are looking at the global macros from India perspective. One is definitely this interest rate, because India's size is still very small. Maybe GDP share wise will be 5% of global economy or near about. So definitely what happens in US that has a significant high impact on us. But I'll put it this way. So it is very difficult for anyone to pinpoint exactly where this whole interest rate situation in US is going to peak. But say, for example, if you talk about a scenario 2 years back, interest rate in US was 0% 2 years back, 2.5 years back, and currently it is near around 5%. So we need to understand one thing. Some may argue it will peak at 5.5. Some may argue it can go up to 6. Some may argue that it has already peaked. But the point is, we need to understand that say a journey. Just let's take a most pessimistic journey from 0 to 6%. Then also we have almost already covered 0 to 5% journey. So my point is 80 to 90% of that painful journey is already over. So at this point of time, I am really not so worried from the interest rate perspective from the US. And second, what happens when we look at, so the only repercussion of that is till the time Fed starts reducing the tax rate, maybe the emerging countries, RBI or the other countries, they will also keep themselves on hold. So it is like wait and watch in the situation for us till the time they start reducing, because our currency, our fiscal deficit, all will get impacted. But I believe that most of the concern related to US interest rate is over. At least 80-90% of that is over. And second interesting point is that, say, for example, if you look at the inflation basket of India versus USA. So like, for example, in India, you will see that we have representation of all the things what we consume mostly. In US, there is a large share of shelter in their inflation basket. So basically the rent, the house related thing. So what happens always there, you will see that the increase and decrease both are sharp, because there is a loop in that. When you increase the interest rate, your rent increases and all that. Okay. So what I believe, probably sometime next year, we will see that we should see that interest rate should start falling in US. So that way, I think now the only problem is, which some may argue, that these high interest rate, 5%, even 4% is a very high interest rate in US context. So there may be a case of asset liability mismatch for few more companies, few more banks. But our base case assumption is that we are going to see a soft landing in US, and eventually in 6 months time, we may start seeing even interest rate cooling off. But at the same time, as I said, from Indian perspective, I don't see inflation as such a big worry, because our basket is very different from their basket. So now the point is, what worries me from Indian context. So I believe the crude price is one factor which can really change game for us. So more than US interest rate, what I closely watch is the crude price movement from here. Because still in India, more than 70% of our import requirement energy is met through imports, this oil energy requirement. So I believe that normally, if you look at the demand supply situation globally, so as I have tracked this oil and gas sector for last 15-17 years, so if you just purely look at the demand supply situation, so it suggests that ideally crude price should not go above $100. So demand supply doesn't support a price more than $100, led by strong demand. We are seeing that China will have a not so high GDP growth, what we saw for them over the last 2 decades. Europe is struggling. China is trying. US is trying to soften themselves. So in that situation, as of now, I don't see a case when crude is going to cross $100 and to sustain at those levels. Maybe there can be a period because of geopolitical instability. But otherwise, I don't see a scenario. And what I believe that till the time crude is below this $90-$95, so things are very, very positive for India. So I think that is more relevant data point for me when I bring the global context into picture.
Great. And So, Satish, I remember talking to one of the fund managers, and he mentioned that uh, large cap has got more concentration of exports to their revenue as compared to small cap.
Right.
So, how is mid cap placed on that horizon? Means, does mid cap has more concentration of exporting revenues as compared to small cap, but less than large cap? How is it?
So definitely, see, Ankit, the key to we understand is, जैसे मैंने बताया कि as you go down the value chain, you will find that it has representation from more sectors. Say for large cap, it will be 10 sectors. As you're coming to mid cap, there are 20 sectors present there. If you will go to a small cap index of 250 companies, you will find that they will have representation from more than 40 sectors. So the point is you are adding 10 new sectors when you are talking about mid cap. You are adding 15 to 20 new sectors when you are talking about small cap. So definitely, but at the same time, if you look at the share of export oriented revenue, even for say mid cap, so you have IT sector, which will have say weight of close to 8%, if I'm not wrong. You have very minimal representation from US pharma. So I believe even if you textile, all this you put together, some agrochemical companies which are export oriented and all that. So even if you club all that, I believe it will be significantly lower as compared to large cap. But you rightly said, as you will go to small cap, then again that percentage will further reduce just because many more sectors have got added in the small cap space.
Great. Satish, you manage mid-cap fund. So if I am I want to invest into mid-cap through a mutual fund. So what should be my ideal horizon when I invest into a mid-cap mutual fund? First question. Second, when you manage that money, what is your horizon of investing into mid-cap stocks?
Right.
And third means typically what is your turnover ratio of your portfolio?
Correct. See, तो इसमें एक क्वेश्चन मैं भी ऐड करता हूँ. What should be the realistic expectations of everyone? See, one thing we need to understand, Ankit. Uh, so for your audience, I'll just make it very, very clear that why we get return in funds, why we get return in stock price. Ultimately, the most fundamental thing is the earning growth. So at if you look at from a perspective, we are actually blessed to born at a time when our country GDP growth is 6 to 7%. So if you look at the earning growth for say my mid cap portfolio, so how you should look at it is that your country is growing at 6 to 7%. You will have 6 to 7% inflation over that. So basically the nominal growth of the country itself will be 12 to 13%. Large cap will be closely mimicking to that. So large cap, you will see 13, 14, 15% kind of earning growth. When you will come to mid cap, small cap, your earning growth will further increase by 2, 3%. So we are discussing a segment which will have a earning growth potential ranging between 15 to 20% over a long period of time. So first, if you just think about absolute 100% ideal scenario where only fundamental works, there is no significant impact because of liquidity, no significant impact because of your currency appreciating, depreciating, money coming into emerging market and all that. So ideally what should happen, if a category is going to give you 15 to 20% earning growth, so ideally that is the kind of return one should expect from the category. So that is one. Second, now coming on the time period. Okay. So definitely, as I told you, this is a very diversified category. And when we build portfolio, so as I told you, there are many sectors, 14 odd champion sector, PLI has come in few, there will be few more. So we make a diversified basket here. And assumption is that few are currently doing good, few will do good probably in 6 months to 1 year time, and few will do good in 2, 3 years time. So normally we always say that at least 4 to 5 years should be the minimum horizon when you are investing in a fund like mid cap. और इसमें भी अगर आप पिछले 3 महीने, पिछले जैसे 6 महीने का जो रिटर्न 30% है, if you are seeing a situation like that, तो you further add 1 year to that, तो वो 4 to 5 years को आप 5 to 6 years कर दो. So the understanding is very clear that we need to have minimum 5 years kind of time horizon. And this is a space which is going to see 15% kind of earning growth. So more than timing the market, it is more how much time you invest into the market. In fact, मैं एक और डेटा पॉइंट देता हूँ. 2018-19 में जब ये मिड कैप इंडेक्स ने पीक किया था, and after that it didn't give any return for 2 years time. But even if say अगर उस peak पे भी someone would have invested, and if he would have remained invested till now, his return would have been in double digit CAGR. So I think for a category like mid cap, it is always important that give as much time as you can to this category, but minimum 4 to 5 years should be there. So that's one. Second, when we build the portfolio, so we have two components. So in fact, if I talk about my portfolio, I have 4 different groups in portfolio, and there are different churning nature based on the group. For example, in one group, I'll try to capture all the themes where I'm very positive for next, say, 5 to 7 years. All this PLI, CapEx, China plus one, defense, everything. So you will see very minimal churn into that particular basket. Second category is where I see that out of these 18-20 sectors, there are few sectors where earnings were depressed in the past 2-3 years because of some reason, maybe raw material, because of any reason. And next 2-3 years, earnings are going to be very strong. So that particular category, you will see that that group I will churn completely in 2 years time. क्योंकि 2 साल बाद आपके दूसरे सेक्टर्स होंगे जहां पे पिछले 2-3 साल के अर्निंग वीक थी, अगले 2-3 साल के अर्निंग बेटर रहेगी. Then third basket I have where I go for the companies say which have a very decent consistent growth. जैसे कि for example, if you talk about consumer durable, consumer staples, insurance business, QSR business, तो ये सब क्या है, बहुत बोरिंग बिजनेस है लेकिन पेनिट्रेशन का गेम है. तो कभी पेनिट्रेशन 10% था, वो 12 होगा, 14 होगा, एंड ऑल दैट. So there also you will see very less churning. So based on different groups of your portfolio, at the same time, roughly 10% of the portfolio are tactical in nature and 90% are structural. So in those 90%, you will see very less churn. But in those 10% which are tactical in nature, वो हो सकता है आप 3 महीने 6 महीने में भी देखो. जैसे say for example, if I am say playing for reduction in some raw material price, ठीक है, that will play out in 6 months time. तो अगर कोई कंपनी मैं उसके लिए ऐड कर रहा हूँ तो you will see that going out. But normally what I have noticed, 50% or say less than that churn ratio is what one should look at. Yeah.
So Satish, to address elephant in the room, general elections 2024, what are your views? How may market react to it first? And second, is there any need, if any, for any changes in the portfolio looking at event risk, that is general election of next year?
See, so event risk wise, I must tell you that as a fund manager, we are always prepared for that. Okay, because see, any risk which we are discussing today on YouTube.
Yeah. If you would allow me, I will slightly paraphrase the question.
Yes.
As an investor, should I, make any changes in my portfolio for any event, for any event risk? Or should I always have a, asset allocation technique which is agnostic to such changes, to such events?
Very rightly you said. So I believe asset allocation is the key from the investor perspective. At the same time, your age profile. So I believe the asset allocation will be based on age profile of each group. So if you stick to that, I don't think one must really worry to that. Second is, say for example, this election, after what we saw in the state election, there is very minimal risk everyone is seeing for the central election. But still, I'll give you some example. What happens that any government is important for taking the new first bold decision. After that, all the policies are run by the bureaucrats. Okay, like for example, if say, if you talk about the UPA government, they came in 2004 and they came in 2004 and then 2009. Yes, in 2009 when they again got selected, if I'm not wrong, market had a circuit that day, upper circuit that day. So what I believe is that these policies actually doesn't get changed by just change in government. But at the same time, government is very important to take the bold moves. So as of now, we are not worried after seeing the state election outcomes. So from our end, we are not changing our portfolio. And even from the investor perspective, I believe it is always not just before election or after election. Because as I said, we must understand that we are in a global uh, context. We always live in that. And our GDP size is less than 5%. So what happens in US, China, Europe, that will definitely have impact on us. So it is always important to go for asset allocation based on your age profile. And if say you want to skip that, if you completely want to skip this process, the only solution is you give more time to your investment. For example, आप 10 साल के लिए बैठ रहे हो तो फिर आप कुछ भी मत करो, आप किसी भी इस तरह के कैटेगरी में डालो. So the higher the time you go for, but if you have a horizon of 1 year, 3 years, 5 years, different fund requirement, then you should always go for asset allocation based on your age profile.
Great. Satish, just one last question, and it has come from our audience on YouTube.
Yes.
Fed has given a guidance of 75 bips rate cut in coming year. So how do you see its effect on Indian markets and Indian interest rate scenario?
So definitely, as I told you, that inflation situation in India was not so bad, but still we were not cutting the rate. The whole idea was that we were just waiting for US to first start it, because otherwise, if we go ahead of them, then we can have impact on our currency. So one is definitely, I believe that day US starts cutting interest rate, you will see. So there will be two impacts what I can see of. One is interest rate situation in India will also reduce, and that is going to help many sectors which are interest rate sensitive. And second also, that if say you just see the numbers from the FII perspective, so interest rate in US is close to 5%, okay, which used to be 0 to 1%, say 2 3 years back. And that is the reason why we have seen very less participation from FIIs over the last 2 years. There have been few months where FIIs were positive. Otherwise, you must have noticed they were negative for a pretty long time. So what I believe, one, definitely interest rate will reduce in India also along with US. Second, I believe once the interest rate reduces in US, you may see the flow increasing towards emerging market because of dollar weakening and all. So definitely it is very, very positive for a market like India if US starts reducing interest rate.
Great. Thank you, Satish. Thanks for the session. I thoroughly enjoyed this conversation.
Thanks,
You
Ankit.
know, I always respect those people who can simplify things for the people, because in our industry, we believe in very complex things. We work in a very complex industry. I should really congratulate you for simplifying all the question answers for our audience. Thanks a lot, Satish. Pleasure talking to you. Look forward to, having more engagements with you.
Sure, Ankit. Thanks a lot. Yeah.